India's IT major Infosys has released its Q1 results. Let's take a look at all the numbers. Infy on Thursday reported a consolidated profit after tax or PAT of 6,368 crore rupees for the quarter ended June 30th, 2024, marking a 7.1% increase from 5,945 crore rupees reported in the year-ago period. The revenue from operations for the quarter stood at 39,315 crore rupees, reflecting a 3.6% rise from 37,933 crore rupees in the same quarter of the previous financial year. On a sequential basis, consolidated net profit was down by 20.1% over 7,975 crore rupees reported in Q4 FY24. Revenue was up by 3.7% on the quarter-on-quarter basis over 37,923 crore rupees reported in the Jan-March quarter. In its guidance, the second largest IT company expects revenue growth of 3 to 4% in constant currency terms for FY25. As per the company filing, the operating margin of 20 to 22% is expected for the current financial year. The dollar revenue for Infosys in the reported quarter stood at $4,714 million, which was up by 2.1% over $4,617 million in Q1 FY24 and 3.3% over $4,564 million in Q4 FY24. PAT stood at $763 million, up by 5.5% year-on-year and down 20.4% on the quarter-on-quarter basis. Now let's take a look at segment results. The financial services segment grew 27.5% in the June 2024 quarter versus 26.4% in Q4 FY24 and 28.1% in Q1 FY24. Retail segment grew 13.8% in the June 2024 ended quarter versus 14.3% in Q4 FY24 and 14.5% in Q1 FY24. If we talk about the communication segment grew 12.1% in the June 2024 quarter versus 12.3% in Q4 FY24 and 11.7% in Q1 FY24. Energy, utilities, resources and services segment grew 13.3% in the June 2024 ended quarter versus 13.4% in Q4 FY24 and 12.9% in Q1 FY24. Manufacturing segment grew 14.7% in the June quarter versus 14.7% in the Q4 FY24 and 14.1% in Q1 FY24. High-tech segment grew 8% in June 2024 ended quarter versus 8.7% in Q4 FY24 and 8.1% in Q1 FY24. Life sciences segment grew 7.3% in the June 2024 ended quarter versus 7.3% in Q4 FY24 and 7.2% in Q1 FY24. Now let's also take a look at the revenues by client geography. North America, Infy's largest market by revenue, contributed 58.9% revenue in the June 2024 quarter, down from 59.6% in Q4 FY 2024 and 60.8% in Q1 FY 2024. Europe market revenue accounted for 28.4% in Q1 FY25, marginally down from 28.6% in Q4 FY24 and 26.8% in Q1 FY24. India revenue reported a jump of 90 bps QoQ, contributing 3.1% in revenue. On the YoY basis, it was a 40 bps uptick. Lastly, commenting on this year's performance, CEO and MD Salil Parekh said that the company had an excellent start to FY25 with strong and broad-based growth, operating margin expansion and robust large deals along with highest ever cash generation.
We started the financial year with a strong performance in Q1 across multiple dimensions, including broad-based revenue growth, expansion in operating margin, strong large deal wins, and strong cash generation. Our revenues for the quarter grew 3.6% sequentially and 2.5% year-on-year in constant currency terms. I'm particularly pleased with 7.9% growth in the financial services segment, where we are seeing improvement in client spend in North America. All geographies and most industry groups grew sequentially, Volume growth turned positive after several quarters. We had another strong quarter of large deal wins with 34 large deals at a total contract value of $4.1 billion. Our clients see us as a preferred partner of choice in consolidation, cost takeout, and efficiency opportunities. This is also a reflection of our leadership strength. With the mobilization of our margin program, we see positive impact on operating metrics. This resulted in our margin expanding by 1 point sequentially. Free cash flow was highest ever at $1.1 billion. We continue to see strong traction from our clients for generative AI programs delivered through Topaz. Enterprises are focused on their own data sets that can be used in generative AI large language models that create huge impact for them. Along with our overall robust performance in Q1 and strong opportunity pipeline, we are seeing early signs of improvement in financial services vertical in the US. While discretionary spends continue to be under pressure, our highly differentiated offerings around driving efficiencies at scale and the transformation capabilities around generative AI have positioned us well in this market. With respect to our recent acquisition of Intech, we have received the required approvals and have closed the acquisition transaction. Given our strong performance in Q1 and our current outlook, we have revised our revenue growth guidance for the full financial year to 3% to 4% growth in constant currency terms. Our operating margin guidance for the financial year remains at 20% to 22%.
Well, that is all for today. Stay tuned to ET Markets for more.